In the energy quadrant, looking at an inside range day in the October crude oil futures contract. Crude oil futures produced the inside range day on a down move, which indicates a pause in the rally is likely to continue, but it's a low probability setup. Crude oil has come up against dual resistant levels of the 50-day moving average and the 200-day moving average the last 2 days, but that's the kind of resistance that encourages profit taking with speculative traders. The 200 is very flat, so it's not a strong resistance level as when it's angled in one direction. Right now, it is flat, so it's serving this purpose, but not in a strong way. The high today, 77.48, was only up 0.08%, so it's pretty much a straight down day. The low, 75.40, down 2.61%. With a little bit of time left in the session, we're still down 2.3% as I speak to you right now. Geopolitics may be easing a touch and temporarily. On Monday, a top U.S. general said the dangers of a broader Middle East conflict have eased somewhat. We only care about this in the context of crude oil because you need crude oil producing nations to be involved to have a direct effect on crude oil. Air Force General C.Q. Brown, chairman of the Joint Chiefs of Staff, spoke to Reuters after getting back from a 3-day trip to the Middle East, and he discussed how there's at least a mildly less chance of a wider conflict since two things needed to happen and one of them already has. He didn't give specifics. He then said how Iran responds will dictate how Israel responds, which will dictate whether there's going to be a broader conflict or not, which in turn for us could dictate the direction of the next crude oil move if there is a broader conflict. The dollar dropped as well today, and shorter dated correlations have broken down a bit in the last 120 days. The inverse correlation between the dollar and crude oil has gone from middle of the road negative to almost positive, and the dollar was down today, adding to the headwinds for crude.